Thank you, Mark, and a big hello from London. Okay, so last week was a busy week. Well, actually, whilst there were plenty of weekly patterns last week, there were only two major groupings, and even in that I'd say there was really just one grouping, and to call it major, well, I would likely take issue with that. You see, we had a number of weekly patterns in FX currency markets, but not as many as you would have thought. I'll start with the US dollar index last week, which had an interesting small double bottom pattern formed over March, and which the larger whole of 2025 action, the whole of it, could be seen as a possible bump and run reversal pattern higher, with the last few weeks being part of the bump. We have seen a follow-on higher for the dollar index this week after last week's weekly key reversal up, which is satisfying, but it has not been the most aggressive move higher, which puts at the moment a small question mark over what should now be the run phase higher. This is echoed in part in Eurodollar, where we had a corresponding weekly key reversal down last week, and also possibly of a larger bearish bump and run reversal top pattern. But though we have followed on lower this week, which believe me is fine, I'm fine with that, the follow on lower hasn't been the most inspiring of moves, and thus raises some small questions right now about the effectiveness of any supposed run move lower. I cover Eurodollar more thoroughly in my daily FX video commentaries each day. Now, in the other currencies, we had a weekly key reversal down in Aussie dollar against the US dollar, which has not seen any follow-through moves lower this week, and we are actually roughly back up midway within last week's range. We also had a weekly key reversal up in US dollar Colombian peso, US dollar Danish krona, US dollar Romanian leu, US dollar Polish zloty, US dollar Korean won, and US dollar Bulgarian lev. The moves this week, the follow-on moves this week, on these have ranged from none at all to a small reactionary move back down to, in the case of US dollar Colombian peso, a strong move lower, though still within last week's range. That just about covers the currencies, so where else did we see any interesting weekly technical patterns? Well, in all the 180 to 200 charts that I look at on a regular basis, there was only one, yes, one, only one, and it was ICE UK feed wheat futures. Here we had a, let's be honest, a not unexpected weekly key reversal down last week, which I spoke about and detailed about in my regular weekly grains and starches commentary last Friday. It appeared to be a very significant move with a possible significant low close. However, this week we have seen a strong reactionary open higher from the beginning, but it has since seen a market that admittedly is moving lower since Monday's open, but which still is a hefty, strong countering move to last week's action. I will cover this more fully in this coming Friday's weekly grains and starches video commentary. As always, I'm happy to answer any direct questions with anyone who's interested. With that, I'll finish this section from London, and I hope you found these comments useful.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.